much for joining us today. I'm Benicia Bindley. I'm a transition program coordinator with Southeast Texas Co-op, and we are so pleased to have worked with Consolidated Planning Group for today's event. Thank you so much.
Thanks so much for having us, Benicia. It's a pleasure to be here with you. I know we've got still got some people coming in. I'm Allison Schaberg, Consolidated Planning Group, and we are a holistic special needs financial planning firm, and we partner with organizations all across the state and conduct webinars on topics surrounding special needs, transition services, planning, all things special needs. So I come to you as a parent. I'm a mom to 4. I have 2 kids with special needs, both. I've got one transitioning right now, one that has already transitioned into adulthood. And these webinar series were kind of born out of a series of, I would say, out of a source of frustration as a mom. So, you know, I eat, sleep, and breathe this, and this is what I do for a living. But also, I live it personally as well. And what I know is when we were transitioning, a lot of things change when your child turns 18 and what they're eligible for, what they're not eligible for. A lot of things change. And so for me, as a parent, I found it unnecessarily, I use the term unnecessarily difficult to navigate these things. And so these webinars were born to help you, to empower you, to put tools and resources in your hand, so that way you know that you absolutely can do this. It's not just you. You're not crazy and you're not dumb. It is difficult. So we try to put these out there to definitively help you on your journey. So today, just a couple of housekeeping items. We've got our contact information in the chat box. We will refer to our YouTube channel. We have a Consolidated Planning Group YouTube channel, and all of our past webinars live out there. You can subscribe for free. And so then you can kind of like look at the different topics out there that might be relevant to you. Some things that are that get a lot of attention are guardianship, special needs trust. We have webinars with the Social Security Administration, you name it, just key steps to planning and things to consider. The waivers, it's out there. There's over 100 webinars out there, so you guys can check them out for the ones that might be most relevant to you. Another housekeeping item, today's meeting is being recorded, and so after today's meeting, you will get a copy of today's slides, so you don't have to write down every single thing that we say, because you are going to get a copy of the slides. And also you'll get a recording of today as well. So your cameras and your microphones are muted, just in case you're wondering, so we can't hear your kids or anything else going on in the background, and we can't see you. But we do know you're here, and we do want to answer as many questions as we can today. So we just ask that you'll put your questions in the chat box today, and Benicia's going to be monitoring that chat box. Don't save them up for the end. We're going to answer as many questions as we can as we go through the webinar. I got 12:03. We're scheduled to go from 12 to 1, so our plan is to be finished by 1 o'clock if you're planning your lunch. And I'm going to give you guys a heads up already. Pollen is flying here like crazy, so my allergies are not great, so I apologize for that. So Government Benefits 101. So today we're going to just be addressing some of the ongoing care and planning concerns for individuals with special needs. A little bit about Consolidated Planning Group. Again, we're a holistic special needs planning firm. We're in Sugar Land, Texas, but we serve families all across the U.S., all across Texas. Over 30 years of experience personally, combined experience. I think we have over 55 years of combined experience in our firm. And we're an advisory and consulting firm, and we predominantly serve families with special needs, as well as agencies, professionals, and physicians who serve them. And so what we say here is when it comes to special needs and special needs planning, your situation is specialized. When we have we have a child that might need care for the rest of their life, not just ours. And then a lot of the families, when we're at 18, we don't know yet. Sometimes we definitively know that we have a child that's going to need care for the rest of their life. But other times we're hopeful and optimistic of our kids functioning in the future. They're not quite there yet, but we are hopeful and optimistic. but there's a lot of special care that goes in to considerations when we're planning for special needs. And basically, a lot of those considerations are because we want to maintain the eligibility for state and federally funded programs. We want to maintain their eligibility for Ssi and Medicaid. And so while as a firm, we have the same similar licenses that other financial planners have, we're also nationally certified as Social Security advisors, members of the Special Needs Planning Academy, and the recommendations and advice that we give you are, yes, they are going to help you in your overall retirement for your own self, but they're basically not going to mess you up or your child up for receiving benefits in the future, and that is so critically important. So anyway, I am super glad you are here. So today we're going to be talking about SSI and Medicaid and Ssdi or RSDI and Medicare. And I'm going to spend a little bit of time on this because this is a topic that is very confusing to people. So if you have felt confused, number one, it is confusing because we throw terms around with the Social Security Administration. And some of those terms are synonymous and some of them are not. And most people, which is completely normal, they jumble them all up together and they get confused about the various programs that are out there. Okay, so first things first, we know about Social Security. Social Security basically is when we retire, right? We pay into the system, Social Security, and when we retire, we turn on our retirement benefits. That is a worker-based program. So the interesting thing is Social Security, Ssdi, which stands for Social Security Disability Income, or RSDI, Retirement Survivor Disability Income, those terms are basically synonymous. So as a worker, we're paying into that Social Security system so one day we can retire. We're also paying into that Social Security system so one day as a parent, as a worker, if we become disabled, that we could turn on Social Security Disability if we become disabled. So that's kind of all in that on that side of the house. And so here's what's confusing. Our kids are disabled, right? We have this disability. And so it only would make sense that if we apply for benefits, that we would be applying for Social Security Disability for our children, right? They're disabled. It only makes sense. It doesn't work that way. So that's why maybe there may have been a little bit of confusion there. So as I mentioned, the Social Security system is a worker-based system. We pay into the system as we work. A lot of our kids with disabilities have never worked, and maybe they never will work. So they basically have not paid into this Social Security or Ssdi system. So what happens? Throughout your life, maybe some of you guys have applied for SSI and Medicaid in the past, or you've applied for Social Security Disability in the past for your disabled children, and maybe you got a denial letter. And I've had people in tears call me, like they're so mad, like seriously, how could you even remotely say that the child isn't disabled? And it's not that they're saying that the child is disabled, they're basically just saying that the child doesn't qualify. So on the right side of the screen, they don't qualify under Social Security Disability because basically they haven't paid in. If you haven't paid into the system and you're applying for the first time, then you basically don't have any work quarters. So you basically don't have any benefits out there. So that denial letter is appropriate in that regard. So now I'm going to switch gears. I'm going to go over to SSI and Medicaid, and this is completely different. So SSI is a means-based program. This program is for the disabled and the indigent, the disabled indigent, okay? So a lot of families, even though their children have disabilities, a lot of families do not qualify for SSI and Medicaid because they simply make too much money, or they have too much assets because the asset test is low. So the bottom line is if your child is under age 18, so they're single, if they're under age 18, it's based off of the parent's assets and income, not the child. Under age 18, that's the key thing, is if the child is under age 18, they're looking at the parent's assets and income, and that's often the reason they don't qualify. But if they're, so in the example that you're applying for SSI and Medicaid, or you want to apply for SSI and Medicaid, your child is under age 18. If you're a single parent, you can have no more than $2,000 assets in your name. If you're a married couple, you can have 3,000 assets in your name. If there's a child and one parent, 4,000 assets, and a child and two parents, $5,000 in assets. So basically, if you have any more than those numbers, the number you should remember is the $2,000. That's basically the number, or $3,000 for couples. You are allowed to have one house and one car that is not countable as an asset. So this is not one house and then land in, I don't know, Brenham. You can't have a house here and land somewhere else, or one house, but the other house is a rental house. It doesn't work. You're automatically disqualified. So where they do sometimes get in the weeds is if you have more than one car and there is a loan on that car, or the car is super, super old, sometimes they won't count that second car, or they will count it significantly less, and you can look at that. Okay, so do we have a question, Benicia? Oh, I think you're on mute.
I am so sorry. Okay, so does the
I do that every day.
Does the asset test for SSI and Medicaid include a special needs trust?
So that's a great question. I'm seeing that. So the bottom line is there's only a couple of places that you can have money that will not be counted for SSI, and that is a special needs trust. And we're going to talk more about that in this webinar, and that is an ABLE account. So there are two places above $2,000 that you can have money that will not be counted against, and that's a special needs trust and an ABLE account. And we're going to go much deeper with that. So the main thing I want you to take away from this is SSI and Medicaid is a means-based test, and it is for the indigent and disabled. And once you qualify for SSI, right now, the SSI amount is $841 a month. If you're not getting $841 a month, it could be being reduced because you don't have a rent or a fair share agreement in place. It could be being reduced for working. So some of our disabled family members do work a small job as well. And so there are deductions for SSI for that purpose. But SSI comes along with Medicaid. Ssdi and RSDI, after 24 months, the individual is eligible for Medicare. So sometimes we have people that are dual eligible for SSI and SSDI and Medicaid and Medicare. So we'll definitely talk more about that. And then again, we're going to answer as many questions as we can. I think we jumped a few slides here. I think maybe we jumped a lot of slides. Okay. So basically, what do you need to do, and when do you need to apply, and what do you need to apply for? So you want to apply for SSI the month of your child's 18th birthday. And we suggest scheduling it out a few months in advance, and you're going to apply through your local office by phone or online. So a key little thing you guys may have already heard, the Social Security offices have been closed for over 2 years. They have been meeting with folks by phone, and they've been taking online applications. Now, the word on the street is that these offices should be opening back up for in-person appointments. I heard next week. I heard by April 15th. So anyway, we'll see what happens. But it's on the radar that they are going to be opening back up. So if you don't know, the Social Security offices are very, very busy. They're very busy. They take a lot of phone calls, a lot of applications, a lot of mail, a lot of things are coming in. And so sometimes working with the Social Security Administration can be frustrating. It can be frustrating to get an appointment. It can be frustrating to get back with anybody on the phone. And so there is I would say put your patient's hat on, get your favorite beverage, whatever that might be, put your patient's hat on and just be ready for that. I would also like to say that I think it's important to create an electronic log. A Word document is sufficient of your communications with the Social Security Administration. Over the years, as your children get older, as you're working with them, you will find this to be extremely beneficial. Sometimes they lose things. Sometimes they never get things that they signed for, what have you. But make a note. When did you call? Who did you talk to? What was their extension? What were they going to do? What were you going to do? What did you send them? When did you send it? Those types of things are good as it relates to working with them and communicating with them. We want you to have evidence that demonstrates that the child's disability began prior to age 22 to qualify for childhood disability benefits, formerly called disabled adult child, on one of the parents' records. So I'm going to go back here just for a second on this previous slide. So remember over here on the right-hand side of the screen, I said that that this is a worker-based program. We have to pay into the system. And if your child has never worked, then they basically don't qualify for Ssdi, except the Social Security Administration has a program, childhood disability benefits, that if you have a child that has a disability and their disability started prior to age 22, then they can be covered under a parent's record for Ssdi, essentially RSDI. So if a parent either retires, dies, or goes on disability themselves, then your disabled adult child would be eligible for 50% of the parent's record. So we're going to talk more about that. And it looks like we have some questions, Benicia.
It says, I could have missed this, but even if a parent is over the asset test, can a child not be tested for specialized Medicaid under SSI?
That's a very loaded question, not for SSI. So if the parents make too much money, the child is not going to qualify for Medicaid through SSI. But and forgive me, there's either 102 or 107 Medicaid programs in the state of Texas. So it is possible that your child may qualify for Medicaid under any one of those number of other programs. And so where you're going to look at that is you're going to go to the Health and Human Services website. You can create a username and password. You can apply for Medicaid, and it asks you a series of questions, and it basically tells you what programs the child may qualify for. So that is a good path forward for that. So that's a great question. Thank you for asking that.
Okay, and then it says, what if both parents receive SSDI?
So if both parents are receiving Ssdi, then any minor children in the household, whether they have disabilities or not, they should be getting a benefit from the parent's record. And if both parents have Ssdi, then you need to apply for childhood disability benefits under a parent's record. If we have an adult child with a disability, and as long as you can establish that the disability started prior to age 22, they're basically going to qualify, and then the child is eligible for 50% of whatever the parent's getting. And there are some ifs and buts to that, because if a person's getting Social Security and they retired at 70 versus 67, the full retirement age, then they would only be entitled to 50% of the full retirement age. So there are some ifs and buts on every scenario with Social Security. But in general, if a parent is either on Social Security themselves, retired, or drawing Social Security disability, if you have any minor children, then they're eligible for benefits regardless of their disability. If you have an adult child over the age of 18 that is disabled and their disability obviously started prior to age 22, then they can be covered under a parent's record.
Okay, so here's one more question. It says, my daughter turns 19 in August, but her dad retired and she is drawing Social Security because she has a minor child and is still in school. It stops in October of this year. Should we apply for disability, adult or child?
Let me look at that one again.
Little one on the bottom.
So she was a minor and is still in school. It stops in October this year. She would apply. Yes, yes. So in the example that your daughter is disabled, it really, they're still paying her because she's still in school. Yeah, you guys need to go ahead and apply for Ssi and Medicaid and apply for disabled adult child under a parent's record. So in the example that this child that is 19 is actually disabled, and we can help you with that. We can take that offline and we can talk to you more about that. But there is a thing that you guys should know, that if your child is already getting benefits because a parent has died or retired or is on disability, or maybe from a perspective that you qualify financially for Ssi and Medicaid, everything changes when they turn 18. So the bottom line, the big thing that you need to know is when they turn 18, you should really schedule an appointment so you can apply for the appropriate benefits for them. When it comes to, do we have one more question?
Yes, one just popped in. It says, what are the examples of a child's disability evidence? Is the school IEP record eligibility?
Okay, so yes, we are definitely going to talk about that. And so evidence of eligibility is going to be medical history. We suggest that when you're applying for Ssi and Medicaid, that you're going to gather the medical history, the physician's name, address, phone number, diagnosis history, medications, employer info, if any, if the child has worked. You want to, the medical history, what were the diagnosis dates? What were the diagnoses that have come up? There is a medical impairment guide. We're going to talk about this. It's called the Social Security Blue Book. It's out there on the internet. You can Google that. And it's basically a medical impairment guide where you can really look up everything that a person has, every diagnosis that they have. And that blue book is going to tell you what evidence, what do you have to prove that the individual is disabled. There are such things as presumptive conditions, and we're going to talk about those in just a second. There's some things that that they presume that the individual is disabled if there are some things in place. One thing is intellectual disability, and IQ basically below 70. That's a presumptive disability. So we'll talk about that. Also, when you're getting ready, so I just want to stress the fact of you deal with your local Social Security office, not the national office. We suggest applying by phone. If you can apply in person and get an in-person appointment coming soon, you might want to do that. Just know that you're going to be down there all day. Plan your day accordingly. It's not fast. It's a very slow process, even when you do have the appointment. But get those appointments, schedule your appointment sooner versus later. You can schedule it for the month that they turn 18. It doesn't have to be after their 18th birthday. So calling a couple of months in advance may actually get it to where you will be able to schedule that meeting for the birthday month. So that's the takeaway on that. The other thing that I will tell you is sometimes you'll call your local office and say, yes, I'd like to schedule an appointment. Well, guess what? You and everybody else. And sometimes they will tell you, I'm sorry, we don't have any appointments. What? Yeah, that's what they tell you. And then they'll say, and we'll call you back in 2 or 3 weeks and we'll get you on the schedule. And my personal experience is they actually did call me back. Excuse me. I was shocked. They actually did call me back in a couple of weeks. And then a couple of weeks after that, I was able to get the appointment. So just take that. But if they tell you they're going to call you back in a couple of weeks to get you scheduled and they actually don't call them again. We have a few more.
Yes. Okay. So who should apply for the child? I'm retired and have asked my son's mom to apply for him for 4 months, and she has yet to do so. Should I do it on his behalf? 2 different households. I'm on SSA, not SSI.
So yeah, I've seen these cases before where maybe the custodial parent, there's a lot of things that go on here. So is there power of attorney, healthcare power of attorney? Is there guardianship, partial guardianship? The interesting thing is the Social Security Administration is their own animal. Okay, mm-hmm. So traditional documents that might work in other places, such as power of attorney, doesn't work with the Social Security Administration. They have their own forms. They have something where you can be a representative payee. So if the individual with a disability doesn't have the capacity to handle the money themselves that would be coming in, a parent can apply to be a representative payee for that individual. There is also a 3288 form, and you can just Google SSA 3288. There's a form where you can call on behalf of that person. That person is going to need to be available for the application for SSI and Medicaid, but the 3288 form will give authorization. The individual with a disability would need to sign it, would give authorization for you to call and get information or provide information on their behalf. But if you don't have guardianship or partial guardianship, sometimes it's difficult. The best case, I mean, we have definitely seen this situation before with grandparents wanting to help, and maybe the custodial parent or whatever, they don't have the capacity, they don't have the time, they won't do it, whatever. So it does make it difficult, but if the individual with a disability has some capacity, then you can work with them to do it, and they could be getting paid themselves. So it's kind of a one-off there. So additional questions, Benicia?
Yes, it says my daughter, 32 years, is only on SSI and Medicaid. If she starts an internship, part-time job, how many hours is she allowed to still keep her qualifications? Or will it reduce her SSI amount?
Okay, so the answer is, again, loaded. So working in an SSI. So let me kind of go to this next one. I'll get to that in a second. So basically, so we talked about the blue book a second ago. Mm-hmm. So this is the impairment guide. If you're wondering, does my child qualify for disability or for SSI and Medicaid? The Social Security Red Book, that is a book that you can download from the internet. The Social Security Red Book talks about working while getting SSI. And so typically, if you're working, it does reduce the SSI. And there are some caveats to that, like where if the individual with the disability is between 18 and 22, and they are a full-time student and working, then you can apply for something called the Earned Income Exclusion, right? So then that way, when they earn money, then it will be excluded and they'll still get their full SSI benefit. But the general rule of thumb, and I can get specific for you, you guys reach out, I can get specific with you, but the general rule of thumb is whatever their gross monthly earnings are, so gross monthly earnings, they don't count the first, call it $85. So take the gross monthly earnings, subtract the $85, and then take the remaining amount and divide it by 2. So basically, if they made $400 gross in a month, and then we subtract the 85, that makes it $315, right? So $315 divided by 2, what are we? The 157 or something like that is going to be reduced from their SSI amount. So their earnings minus $85 divided by 2 is what the amount is that would be subtracted. So some people question, like, we get this all the time, like, I'm trying not to lose SSI. Well, the thing is the whole thing about the Red Book, there's all kinds of programs through the Social Security Administration to help people get to work. They know that people in their heart of hearts that they do want to work if they can. They want to, have meaningful, work experience and things like that. So there's all kinds of programs such as the Ticket to Work program. There's a 9-month trial work period. So it's not like if you go to work, you're just going to instantly get kicked off of SSI and Medicaid. People feel scared of the Social Security Administration. They feel scared and they feel tired because it's so hard to get everything set up. And they're like, oh my gosh, if my child gets a job, forget it. He's just not getting a job. We'll just keep the SSI and Medicaid and he can just volunteer, So I see some of things like that. But there's also a lot of programs all across the U.S., but also in Texas, that are designed to help individuals with disabilities close the gap on the impediments to employment. And so I'm talking about the Workforce Commission, Texas Workforce Commission, vocational rehab. That's one of the programs. And then we've got Workforce Solutions, summer earn and learn, and pre-employment training services. There's all kinds of resources out there, but that red book is really going to tell you what happens if you go to work on SSI and what happens if you go to work on Ssdi. Additional questions?
No, they were just comments that you answered the custodian. One wants to schedule a meeting and then summarize their feelings.
Gotcha. Okay. So presumptive disability conditions. There's some things that are just presumptive that they automatically, and you can Google this. Google's our friend. You can Google this. But the big ones that we see that with kids with disabilities, we see Down syndrome, intellectual disability, cerebral palsy. Those are the big ones that we see. There are some other ones: total blindness, total deafness, bed confinement, stroke, more than 3 months in the past. So those are some of the ones that they consider presumptive, just meaning that they automatically decide that you guys are that the individual is disabled, and then they will make that determination so you actually could get started being paid sooner versus later. So let me just tell you a little story. When you apply for SSI and Medicaid, you should fully expect the patient's hat again, put that on, and you should fully expect that it's going to take 3 to 6 months before you hear anything. Fully expect that. But you can keep following up with them. If it makes you happy to call every month to see where they are in the process and what's going on, to make sure that things, if you want to micromanage it again, I suggest that, because sometimes if you don't, it moves slower. So if you want to, follow up with them once a month or, every little bit to see kind of where things stand, you can totally do that. So if you have a presumptive disability, they may just go ahead and approve SSI for up to 6 months based off of those conditions ahead of time. So maybe like they haven't been fully approved and they're in the queue, but they may go ahead and just start paying because it's presumed that the individual is truly disabled. One thing that I didn't mention, and it's so important that I mention this, in the beginning, when you apply for SSI and Medicaid, they go ahead and they have you apply for Ssdi too. And I already told you the kid doesn't qualify because the kid didn't work, right? So what they don't tell you, so we've got these 2 different programs and their letterhead, they look similar. You got to look close, right? Because one says, SSI, one says Social Security. But other than that, they look the same font, the same everything, right? Basically what happens when you apply for SSI and Medicaid, in a few weeks, you're going to get a letter of denial, and it's your Social Security denial, the Social Security disability denial. And this is when people call me crying, right? They're really mad. It's like, how can they say this child is not disabled? If they lost their mind? But what's happening is what exactly should happen is you get this denial letter. They are denied for Social Security disability because they don't qualify, because the mom and dad are not already getting Social Security or Social Security disability, and the child is never paid into that. So that denial letter is correct. But what they don't tell you is that there's a separate letter coming from SSI letting you know that they're going to be approved, and that might be anywhere from 3 to 6 to 8 weeks later. So I just want you guys to know that that can happen. So don't freak out when you go to the mailbox and you get that first denial letter for Social Security disability. Bottom line is if there's a likelihood that that they're going to make the determination of yes, then they can pre-approve this for those presumptive conditions. Okay, so here's where we're going to kind of talk about, we kind of talked about this a little bit earlier. I'm going to go a little bit deeper so you totally have an understanding of this. But basically, benefits when a parent retires, becomes disabled, or passes away. So when a parent applies to receive their own Social Security disability through their retirement or disability, the disabled adult child, just so you know, for 40 years, the Social Security Administration, maybe even longer, has called it DAC, Disabled Adult Child. In the last couple of years, they have changed it to CDB, Childhood Disability Benefits. But CDB and DAC are the same thing. So disabled adult child or childhood disability benefits. But the bottom line is, if mom or dad retires, the disabled adult child is entitled to receive 1/2 of the parent's benefits. So in this example, dad retires. Dad's getting $4,000 a month in Social Security. Disabled adult child will be entitled for $2,000 a month. If the disabled adult child was already 18, they were already getting SSI and Medicaid, basically what's going to happen is this child is going to switch over to Ssdi, and in 2 years, they'll be eligible for Medicare. They're going to keep their Medicaid, be eligible for Medicare, and they're going to take the higher monthly benefit of the two. So you don't get both. You don't get to stack them. A lot of people ask that question, but you will get the higher benefit. Do we have an additional question?
Yes, it says when SSI decreases to what level amount of money, the SSI will disqualify not for the 2,000 asset amount and lose the Medicaid.
So, okay, what I think she's referring to is the Pickle Amendment. So thank you for bringing that up. So a lot of people worry, and the reason they worry, right, is because we need our kids to stay Medicaid qualified, because our kids are on the waivers interest list, and the waivers are Medicaid waivers in the state of Texas. Some of you may already be getting HCS, Texas Home Living class. Those are examples of some of the waivers, MDCP, some of the waivers in Texas. You got to stay Medicaid qualified. So what she's basically saying is when you switch over from SSI to Ssdi, basically the income is too much and you could disqualify for Medicaid, and she is right. However, there is something called the Pickle Amendment, just like a pickle that you would eat, the Pickle Amendment. And the Pickle Amendment basically figured out that, yes, this is a problem, that when disabled kids move over from SSI to Ssdi, they make more money. They go from $841 to $2,000 a month in that example. They're going to lose Medicaid. And so there's something called a Pickle Amendment that basically preserves the eligibility for Medicaid if they were getting Medicaid before and they switch over to a parent's record, then they can keep Medicaid because of that Pickle Amendment. Now, this is where it has to be super careful. And as National Social Security advisors, we have specialized software on this that we can do a complete analysis and be able to tell you exactly when and how to pull the trigger on this. But this is super important for any families that are on here today that are thinking about retiring, thinking about pulling the trigger on their Social Security benefits, and they still have a minor that hasn't turned 18. You could accidentally mess it up to where they're going to get 50% of your Social Security benefits, and because they did that first and they're still a minor and they didn't qualify for SSI and Medicaid first, that they won't qualify for Medicaid in the future because the Pickle Amendment doesn't apply there. So all I'm telling you is, if that's you, if you're in that category of like pre-retirement and you're thinking about pulling the trigger on your Social Security, do reach out to us. We will help you. We'll help you make the right decision. And just so you know, whether you have a special needs child or not, 80% of people pull the trigger incorrectly or are not getting the benefits that they should get with the Social Security Administration. So this is really, really an important factor. So thank you so much for bringing that up. So the Pickle Amendment is how you're going to keep Medicaid and stay Medicaid eligible and not lose your waiver when you switch over to Ssdi under a parent's record. So as I mentioned, after 24 months, then they'll be eligible for Medicare. So if they're 18 or over, once they switch over to that Ssdi, then they'll be eligible for Medicare. Okay, so they'll be dual eligible, Medicare and Medicaid. A lot of families ask me, you guys didn't, but I'm going to tell you anyway. A lot of families ask me, well, if my child is getting Medicaid and Medicare, should I keep them on my group benefits? First things first, if you have a disabled adult child, right now children can stay on your health insurance until they're 26, but if they're disabled, basically they can stay on your insurance longer, indefinitely. There's a form that you need to fill out. You need to call your HR company. You need to ask about that. It is my suggestion, to keep your disabled kids on your group health plans if you can, because those benefits pay better. You have freedom of choice to take your kids where you want to go. Our kids have complex medical needs. I want to go where I want to go. I want to see the specialist I want to see. I don't want to be pigeonholed into some doctor that I wouldn't go to on a good day or a bad day. I want to go where I want to go. So it is my suggestion, and that's what we do with our kids. We keep them on our group health insurance, and then they have their other eligibility. It's not always possible. You can't always do that, and I certainly understand. Medicaid pays for a lot of services that other things don't pay for, but it also has very specific doctors that you have to go to and see. So what happens? Basically, when your child is getting 50% of the parent's record is not reduced. Okay, so if dad's benefits $4,000, he's not going to get less because junior's getting $2,000. Okay, junior's going to continue to get this as long as the parent lives. When the parent passes away, the disabled adult child is going to be entitled to 75% of that parent's amount. And where this starts getting tricky, and this is where our software starts being very, very helpful, is there are such things as family maximums. So a lot of times we see a caregiver in the household. One parent stays home and provides caregiving services, so maybe they don't have a work record, and that spouse is going to be drawing off of the other spouse's record for Social Security. So when we have a spouse drawing off one record and then we have a disabled child, there are some family maximums, and we can help you determine that. How are we on questions?
Okay, there's one comment and then one question. Let's see. The question is, what about plans that have HSA and require you claim on taxes? Adult child has to have their own household, right?
I'm not sure about that on a health savings account. If the HSA is in the kid's name, I would be real careful on the health savings account being in the kid's name, because that could be counted as an asset. And I'm not sure. I'm not sure that I'm understanding what it requires you to claim on the taxes. So that would be, the taxes are one thing, but how the money in the HSA account, if and kind of where you go with that, I'm not really sure. But if you're asking, and I do get this question a lot, as far as Ssi and Medicaid purposes, and the child turns 18, do they have to file their own taxes? The answer is no. Whether you claim your kids on your taxes or you don't claim your adult child on taxes, that doesn't affect, and that is including with guardianship or not having guardianship or what have you. If you're providing for their basic needs, most families are still claiming their kids on their taxes.
That they followed up. It says you claim person as a dependent, and then there's another question. It says if a child is already drawing off parent, can you still get Medicare or Medicaid on them? Her dad and I are divorced and he is older than me, so he started drawing.
So yes, so in those situations, and also you can switch over. So let's say dad's retired now, he's older. She can be getting childhood disability benefits under his record. Again, it doesn't hurt him. If she's over 18, if she's a minor, if the kids are minors, then they qualify. And if she's over 18 and disabled, then she would qualify. And then after 2 years, she would be eligible for Medicare. But then let's say 10 years down the road, whatever the example is, you retire as mom and your benefits are higher than dad's. Well, guess what? Your kid can switch over to your record now. So she could have benefited under dad's record all this time, and then you retire. If you're basically whoever's record is higher is who they can be on. But the key to understand is the benefits. You don't have to just be eligible. Like the parent has to either be on drawing Social Security retirement or on Social Security disability, not just eligible for it. They have to turn on their benefits for that childhood disability benefit to be applicable.
And there was just an added statement that says you must apply for Medicaid once you become eligible for Medicare. MSP or Medicaid programs are not automatic on the transition, just as added info.
So yes, but and a lot of times, so the kids are already on SSI and Medicaid, and then they switch over, and then they're covered under the Pickle Amendment. But over the last 2 years, one thing that I have seen with the pandemic, and I don't know if it was a snafu in the system, I've seen people get letters that Medicaid was ending, that you need to reapply. And you just basically need to reapply. So there was some snafu of people getting kicked off of Medicaid and panic letters of, oh my gosh, we're losing benefits and stuff like that. So that did happen, and it is possible that when you switch over that you would need to reapply. But whereas, and again, I just want to be clear, there's a such thing as SSI and Medicaid, like the Medicaid that you get through SSI. And then there, again, like there's 102 other Medicaid programs in the state of Texas. So a lot of people, a lot of the families that we serve are getting Medicaid through SSI. Some families were getting a waiver prior to qualifying for SSI, so they actually don't qualify for SSI right now. They were getting a waiver and they were qualifying for Medicaid under the waiver, because that Medicaid qualification is based off of the child, not the parents. So there's a lot of, I would say that there's a lot of different ways and different doors that you can walk through and end up getting Medicaid, not just SSI, but most people associate Medicaid, the Medicaid that comes along with SSI.
Mm-hmm. And then there are several comments about how to get the slides and the recordings, and you email that out after.
Sure. Yes, we're going to put out an email to everybody, and you guys are going to get a copy of today's slides and the recording. These are just some of the acronyms that we've been throwing around today. The Social Security Administration, as does everybody else, they love acronyms, and it's just enough to make you crazy. So anyway, we just put those out there for you. Okay. So to be entitled to Social Security Disability, you're going to file an application, be found to be medically disabled. You're going to be fully insured. Remember, this is the worker-based program, and you're not working, and your countable earned income is less than substantial, not working, earning more than substantial gainful amount. So basically what you need to know is if your kids are working, when you apply, when you're applying for basically SSI and Medicaid, that the Social Security Administration uses the figure $1,350 gross per month as the substantial gainful amount. What you should know is this amount changes every year. So it just went up. I think it was $1,341 or 21 last year. It's $1,350 this year. So basically, if the child is making more than $1,350 per month, when they apply, they're going to get denied. Okay. So again, and same thing, if they're applying for Ssdi and they're making more than $1,350 gross per month, then they're not disabled in the eyes of the Social Security Administration. And we all know that we can't survive off of $1,350 gross per month, but that is basically what they're looking at. So you need to keep that in mind. As far as being entitled to Retirement Survivor Disability Insurance, RSDI, is the child 18 years of age or older, disability began prior to age 22, or is a dependent of the insured worker. So basically, we have minor kids. They're a dependent. They're not married, and they've not previously performed substantial gainful activity of that $1,350 per month. Okay, we talked about this red book. It's a boring read, guys. I'll tell you, but it is good. If you've got, look at us go. If you guys have, kids that are in the vocational rehab program or any of the other worker programs, or they're in, trying to work a little bit, you got to look at this, because there's two different buckets here. We've got SSI and Ssdi, and what you can make on each of those programs is different. So you do want to educate yourself on the Ticket to Work program. You do want to educate yourself on the 9-month trial work period and how much they can earn and what they can do during that 9-month trial work period that won't be used against them. So this is an important thing. Okay, so how do we protect our child's government benefits? But first off, we want to make sure that you've got your assets in the right buckets. So we want to ensure that your special needs family member's name is not set up as a beneficiary in any life insurance, investment, or bank accounts. I'm just going to go ahead and say this again. they can have their own bank account. We can't have more than $2,000 in their name. But a lot of families, if you're like most families, we've got our beneficiaries set up. Maybe our beneficiaries are our spouse. Our primary beneficiaries on things are our spouse. And then we have a contingent beneficiary that if I die and my spouse is already dead and gone, then who gets the money? That's the contingent beneficiary. Well, a lot of families, what they do is they say, well, that's easy. I'm going to name my children. I'm going to divide this equally amongst my children. And that sounds great, but it's wrong. Okay. And so if you've done it, it's no big deal. You're not in trouble and you can fix it, and you can fix it for free. You don't even have to hire anybody to do it. It's just simply a change of beneficiary form. Number one, we never, ever want to name our special needs child directly as a beneficiary. There's a right way to go about doing it and a wrong way. So naming little Johnny outright as a beneficiary on anything is going to make him get more than $2,000, and he's going to disqualify for Medicaid, right? So we don't ever want to do that. So the right way that we're going to do this is we're going to leave money to the third-party special needs trust for the benefit of little Johnny. Then it goes to a special needs trust. It's not counted against him for SSI and Medicaid purposes. He maintains his eligibility and he maintains his benefits. Folks, I just want to say that it's super, super important. So number one, if you're taking notes, make a note to check your beneficiaries on everything. I'm talking about old 401ks, old 403bs, old pension plans, life insurance, anything that you can have a beneficiary on, check it. Life gets busy. We do these things. We do it with good intention, and we put it on the shelf, and you're not alone. That's what everybody does. So just be intentional to look at these things, especially if you've gone through a divorce. I can't tell you how many times I've seen where beneficiaries didn't get updated post-divorce, so that might be something to look at. And then the other thing that I want to say is it's really, really important that you guys have intentional conversations with any parents or well-meaning family members that might want to leave money to to their grandkid or to their niece or nephew or things like that, because this is where we were talking about being highly specialized and special needs. That's where we're different. We're a special needs planning firm. We know how to leave money properly to individuals so it doesn't disqualify them for benefits. Your average mom and pop advisor does not know this. So when your mom and dad go into their financial advisor and they say, you know, I have a disabled grandson and we would like to leave our money to him, they say, great. And they list the kid's name. That's what they do. And it's wrong. And so it really, assets have really got to go to a special needs trust. So what happens if grandma and grandpa does this and they leave money to little Johnny and one of them passes away and Johnny has now received this large lump sum of money? Basically what you're going to have to do, you're going to have to hire an attorney, you're going to have to get a court order, and you're going to have to get the money redirected to a first party special needs trust, or they're going to lose SSI and Medicaid. So it's a lot cheaper to do it right on the front end rather than to pick up the pieces on the back end on an accident. Okay, so places that you can have, money when it kind of, we talk about how do we fund future care, and do we have money in the right buckets? You want to establish a special needs trust for their future care. There's a first party and a third party. First party money is their money. It could be a settlement that they got. It could be an example of a refund of a scholarship. It could be earnings that they've had. It's their money. Special needs, a third party special needs trust. This is like life insurance proceeds, assets that we want to leave to our kids, money that has been given to them by somebody else. And just so you know, when grandma and grandpa write them a check for $500 for their birthday, that can be counted against them as income for SSI purposes. So be smart about these things. Just selling our kids money, writing them a check for their birthday and things like that when they're getting SSI and Medicaid, it can mess them up. Most people fund their special needs trust. A lot of times people fund their special needs trust with their current assets, but most people are going to need their assets that they've saved up over the last 25 to 35 years for the 25 to 35 years that they're going to spend in their own retirement. So a lot of times people fund the special needs trust with life insurance proceeds. So life insurance on my life will fund the special needs trust for my kid upon my death. And that's the example. So an ABLE account, we have entire presentations about special needs trust, entire presentations about ABLE accounts, and kind of all of that stuff. But basically what you need to know about an ABLE account is the beneficiary is the account owner. So basically, your disabled child is the account owner. Income earned is not taxable, and it does not jeopardize Ssi and Medicaid. And basically what you need to know is that contributions can be made by anyone. This is for a child whose disability, or an individual whose disability started prior to age 26. The contribution limits are $16,000 a year annually. You can put an additional $12,880 if they're working. But what you got to know is the account can never be over $100,000. So you never let this account grow over $100,000. You can only have $100,000 in this account before you disqualify for Ssi and Medicaid. Okay. So that's the key with that. And that answers the question of why should I have an ABLE account and a special needs trust? A special needs trust, you can have an unlimited amount of money in a special needs trust. An ABLE account, you can only put $16,000 a year into it, and it can never be over $100,000 before you disqualify. Some people want to know, they have a 529C for college for their kid, and maybe their child may or may not go to college. Basically, on an ABLE account, if it can be construed as achieving a better life for an individual with a disability, you can pay for it out of an ABLE account, which includes college. It includes tutoring. It could be an iPhone. It could be a vacation. It could be any number of things. It could be therapy. It could be transition programs. I could just go on and on and on of all the things. Just think about all the stuff you spend money on for your kid. You can basically pay for it out of an ABLE account if they're disabled. And so the fact that the money grows tax-free, and as long as you use it for a qualified expense, that there is no penalty on that, that's why it can be helpful. And we can help families set these up. So this is an example. This is just, and I'm not going to spend a lot of time because I know we're about to run out of time. This is an example of some things that an ABLE account can pay for. So just so you know, with Ssi and Medicaid, as long as if you pay the rent for your kid, there's going to be a 1/3 deduction from their SSI. So if you pay the rent. But if they pay the rent, or the rent is paid out of an ABLE account, you're not going to see a deduction for your SSI. And I can explain that a lot further. Can even help by providing a rent or a fair share agreement. So if you're getting less than that SSI $841 a month, you probably need to submit a rent or a fair share agreement. We can help you with that. But this is basically some things that an ABLE account can pay for. And then a special needs trust, it looks like, oh my gosh, a special needs trust can pay for more. It's just the way the slide is. But the bottom line is on a special needs trust, if the person is getting Ssi and Medicaid, you can't pay monthly debt service for basically food and shelter is what you can't pay for out of the special needs trust. You can pay for it out of the special needs trust, but there will be a 1/3 reduction to the SSI if you do pay for it out of a special needs trust. So again, if you've got more questions on the special needs trust, I suggest you kind of look at some of those other, webinars that we have out there. As far as, some of the questions that we get all the time is, who's going to care for our kids when we're gone? We can help you develop a future care plan. A lot of the questions that families come to us with about is they say, I don't know how much to plan for. If I know that I have a child that has care needs for the rest of their life, not just mine, how do I plan for that? How do I plan for my own retirement? How do I plan for their future care? And we have, very comprehensive analysis that we do that will develop a future care cost and be able to kind of tell you what do those costs look like? How do you plan for that? How do we close that gap? And we also can go even deeper of how and when you can pull the trigger on retirement yourself. We suggest considering touring care facilities for partial, full residential care, transitional care. Some of the waiting lists in some of these places could be 5 years or longer. But what I would do, and I'm just telling you, go tour some of these places. It's wonderful because a lot of times families think, oh my gosh, I don't want to institutionalize my child. That's not what I'm thinking about. But what you'll see when you start touring some of these, the most recent one I toured recently was Daymark Living. I've toured Marbridge Foundation and Brookwood. I mean, there's a lot of cool places all across the state of Texas. But what you'll see is that they have community, that the residents there are happy, they have a job, they love it there. You're not pushing them away. Like parents feel like they're pushing them away. Most of the time they want the parents to come visit. They don't even want to come home, or they come home and they're so out of sorts at home, they just want to go back. Anyway, so I would say do check those things out. And here's the thing, check it out before you're 80 or 85 years old. We're not always going to be the age that we are now. We're not always going to have the same physical abilities that we once did. And we may need a place in the future, but make careful considerations before we name siblings as the future caregiver. So how are we on questions? I know we're just about out of time.
Yes, there are several. One of them, can you use an ABLE account with money from a special needs trust? And should I? Is money easier to spend from an ABLE account?
I don't know that it's necessarily easier or harder. I mean, you do have to keep an accounting from a special needs trust, and it's suggested that you keep an accounting for the ABLE account. I always suggest that you keep an accounting. I've yet to have a family be asked to show their accounting, but whenever the IRS decides that they're going to be on that bandwagon, then they're going to be on the bandwagon, right? That's basically how that's going to work. So I don't know that it's necessarily easier. I would just say that if you're paying for housing, if the child's in residential, you're paying rent, the ABLE account, I suggest paying rent out of the ABLE account, and you can make a contribution from the ABLE account to the special needs trust, and the special needs trust to the ABLE account. You definitely can.
Okay. Another one, it says we tried an ABLE account before we really needed it with US Bank, and it has been nothing but a headache. Are there any other options here in Texas beside US Bank? And then they followed up by saying Daymart looks like it would be fantastic, honestly.
Yeah, actually, I took one of my kids with me when I toured that, and my kid is just, she's graduating college. She actually wants to go work there. It was fantastic. All of these places, I've toured all of those places, and they're all fantastic for different reasons. And so I'm just telling you, don't be closed-minded. Go there. Go eat lunch. Go make a day of it. You're gonna be glad you did. Like, my heart felt so full after touring those places, just seeing how happy the residents are. So anyways, it's definitely worth checking out.
Okay. There are a few other, I know it's after 1 o'clock. There are a few other questions. Do you want me to continue?
Yeah, I can, stay on just for a few more minutes and just wrap up any few additional questions.
Sure. There it says, where can you set up a special needs trust? And then they have a question about paying for college when both parents are on Ssdi.
So a lot of those webinars are going to live on our YouTube channel. We have a whole webinar on college planning, and it has all kinds of financial stuff in there as well for individuals with disability. And to the I want to go back to the guy's question on the ABLE account and nothing but problems. You are so right. And I'm not like dogging US Bank because I don't know them specifically, but I'm just going to tell you some of the ABLE accounts out there are an absolute nightmare. And the reason why is because you're dealing with generalists, not specialists, when it comes to the ABLE account. Most people don't have any knowledge, including Fidelity, including, a lot of different companies out there. They don't have any knowledge about the ABLE account. They don't know how much you can put in there. They don't know how to get it out. There's some ABLE accounts even in the state of Texas that are not that great as far as getting money in and out of. So definitely we can help with that, and we can make those recommendations. But I definitely know exactly what you're talking about. And the thing is you can have an ABLE account from any state. I don't recommend going through your bank because less than 1% of the time does anybody at the bank understand anything about disabilities or the ABLE account. So that is not my recommendation. We definitely have definitive recommendations there. I'd just like to take a moment to say, meet my team. I've got I actually have 4 other people missing from this slide, but I always just like to say I work on a collaborative team. It's not just Allison Schaberg. I work on a collaborative team of professionals, and we are ready and able to help you, can help you with those Social Security analysis, those future care cost estimates, and those things that we talked about that are relevant to your planning needs. I know that we talked about our YouTube channel a lot. I think I put it in the chat box too, but here's our YouTube channel that you can subscribe to and kind of check out other webinars. We do webinars on a very regular basis, so you're welcome to join our webinars at any point where we're happy to do that. Our initial consultations are always free. So if you're interested in an initial consultation, I think somebody had put that in the chat box earlier, you can use that QR code, and that will take you to our booking page, and then you can schedule an initial consultation so you can kind of talk about your individualized situation. So we hate to go over, it's 1:04, and so sorry for that. I know it's a lot of information, it's a lot to take in, but you've totally got this. And we will empower you and give you the tools and resources that you need to be successful. So don't be overwhelmed by Ssi and Medicaid and all of these other things. Don't be overwhelmed by Social Security and pulling the trigger on all of those things. We can really, really help you with that. So it has certainly been my pleasure to partner with you, Benicia. We look forward to partnering with you again, and maybe you can do a poll or kind of find out what the topics might be most relevant to your families, and we can kind of hone in on a specific topic that would be good for them.
Definitely. You're always fantastic, a wealth of knowledge. We greatly appreciate it.
Thanks so much. It's been a pleasure, and I hope everybody has a great afternoon.
You too.
Bye now.